Hi, I'm Steve, and today we're talking about QuantGate Systems and their trading products, both Pilot and Stealth, which both use the same AI engines. The purpose of the software is to determine the upcoming price activity, and it does this by monitoring the collective trading behavior of all the participants in the order book. In theory, with access to this information, we could identify prime trading opportunities and the best time to enter and exit a trade. I'm going to give you a general overview of the system and what it looks like to use it. We're going to go through a couple of trade examples, and just so I can point out what we're looking at and what makes it a good opportunity. After that, we'll go into some details about the AI signals, what they mean, and how they work. All right, let's dive in. So I've recorded a few trades that I've made today using the demo mode to demonstrate. So when I open the app, this is the watch list and the top list. You can see that I have a mix of securities, Forex, futures, and crypto here, and I can watch them all at once. You don't have to worry about them getting lost in the list because the better the trading opportunity, the higher it'll climb up on the list. So when you have things sorted by opportunities, which is the default. At the top of my list right now, I see that I have KDP or KDP. In this view, I can see that the four bars that represent the four AI signals, and I can see the strength of the opportunity. The circle here is almost fully closed, meaning the overall perceived value of the asset is oversold. The percentage represents the strength of the opportunity, and we want it to be above at least 80% before we enter any trades. So if I click into the security, we get a bit more information. All four of the AI signals lights are lit, which confirms that all four of the AI engines agree on the upcoming opportunity. So here I'm just entering into the position by using a limit order and buying what's on the ask. I'm just using the default of 100 shares. And I'm going to click buy here to enter into the position. And now my order is set. So my next step is to always set a stop loss, which I'll do now. And I usually just use the lowest or maybe the second lowest stop loss available. Just if you set it too low, sometimes you get stopped out too quick, right? So I've paused the video here because I want to show you the steps for taking or setting a take profit. This white box right here shows you the equilibrium pricing for the security, meaning that if all of the orders on the order book were executed all at the same time, that this is what the stock price would be. And so what that right here, 30.44 in this particular case. And so I will set my take profit at just under that, like one step below that or under that, meaning it's even easier to get to that point. So between your stop loss that we set in the last step and the take profit, you've kind of clearly indicated where you're willing to play. You don't want to go lower than your stop loss, obviously. It'll just get you out of the position before you lose too much money. And then the take profit is just like, hey, I'm gonna exit the position when it gets to this point here. And so yeah, so this is what I'm doing. I'm just gonna let the video play out here now. So I'm in the position. My stop loss is set. My limit price is set, and you can see here that this is the amount of either, well, it's basically my profit and loss, right? So if it's red and shows a negative value, that means I'm currently losing this much money on the particular trade. And if it's green and positive, that means that that's the amount of profit. Now what's interesting is that this is actually a button, and you can double click to exit the position at that price using a market order, and it gets you out immediately. So I'm just kind of monitoring it as I'm in the position here, and if I see it going my way, I'll often just take the profit right away. So I'm sometimes in and out of a position within seconds. Sometimes like as little as like 3 seconds, which is kind of funny, or it could be minutes. I usually won't let myself stay in a position for more than 5 to 7 minutes. In my interview with Giancarlo on another video on my playlist on YouTube, he was mentioning that he sets a 7-minute timer. Anyways, so I see that the price is going my direction. Overall, this stock is on a downward trend that I just confirmed with the chart there. And so I decided now would be a good time to take that profit. Now you can go to the trade log and it shows you your profit on that particular trade and all the other ones you've made that day. And this one just happens to be the first one. Okay, so I've got a couple other videos to show you. Let's dive into that next. So here's another video for you of just another couple of trades that I made and showing you how to use this system. So before I press play, what we're just looking at really quickly is a very short watch list. I've only got five items in this particular list. And I'm looking at the top lists, which is basically like pilots recommendations for, a bunch of the super active stocks that are happening right now and the strength of the opportunities. Now, in this case, I'm looking at GILD, which has a 90% oversold indicator. I'm just going to press play now. Okay, so I saw that it was a really good opportunity. I click on it. It just a little thing saying that it's added to my watch list now. And just looking at the chart really quickly to kind of confirm where things are at, I see that, I'm just going to move my face a little bit. I see that we are in like a very downward kind of spike. But all four of the algorithms, when I clicked into this, were saying, and again, all four again, are saying that it's a really good opportunity. So I decide, okay, well, let's go into it. I use a limit order again, and I set just using the default of I'm buying the ask. I confirm the order, and now I'm in the position. Now immediately, the stock price jumps or dips down a tiny bit more. So I'm currently, like it shows right on this button and the profit and loss button in the middle here. It currently shows a negative $2 loss right now, but that's okay. I'm gonna set my stop loss at $7, and then I'm gonna go to the take profit and set it at $10. So I'm willing to lose $7. I'm hoping to gain $10, and those are kind of like my limits. Now those are set. So as you're in the position here, like I was saying, this is a constant monitoring of the of your profit and loss. And if, just like I was mentioning before, you can double click on it to immediately take you out of the position at that particular price. So let's kind of see how this plays out. So as you can see at this point, about 2 or 3 minutes into the trade now, the profit is about $4. And so I'm looking at the 1 hour chart right now just to see what the price history has been, to see if I think that it might go any higher, to see where the support and resistance are. I go back to the 1 minute and see that there's not necessarily a lot of reason to think that it's going to go much higher than this, and so I just decided to take my profit and to look for more opportunities. So I go back to my watch list. I see that now Dell is presenting itself as an opportunity, another oversold position, 85%. I immediately use a limit order and select the ask so I can enter into the position. I buy 100 shares. Like I said, that's always the default. And perhaps I should have waited a moment or two longer because the price actually drops a little bit lower. And, like it shows right in this profit and loss thing, I'm currently losing $5. So I've already set my stop loss and my take profit using the essentially the defaults or what I had described before at least. And so because I've already entered in this position at almost a little bit too soon, I'm actually kind of excited at this point to see like, oh, hey, look, it's actually going in my direction already so quick. And I might not even wait again. I might not wait for the take profit, like the limit price that I set using the take profit feature. I might just accept the trades, double click on the profit and loss, take those profits, and once again, go and look for another opportunity. So let's see what happens. I see that we've got a red candle after the green that we were hoping for. It actually changes, it reverses a bit, which is great for us. I see a $17 and $19 profit, $20. And so I think if I remember correctly, I just take this profit and run with it. And this is almost another lesson to say that you should probably set lower expectations on the take profit feature if you want it to stop you out. Because I could have made $20, I think, on this stock or on this opportunity already. if you remember what the prices were showing here. But now I just take it at 14 and happily take that little profit. Oh, and this is actually a good example. I'll pause it right here. So this is a good example where I lost $3. I think this was actually a stop loss is what happened. I think I had set my stop loss too small on this one. Yeah, it's too bad I don't have that one to show you. Anyways, moving on. One more for you. The last clip I have for you here is a short sell opportunity that I took advantage of. So from my top list, I saw that ALB is being presented as an 84% opportunity. So as I click into it and wait for the chart to load, I set up the limit order. I noticed on the chart that there's this price activity right up here, which would suggest a support level, or a resistance level that will likely bounce off of. So meaning a short sell opportunity would kind of make sense. I enter into the position and see really quickly that it goes against me at negative $28. I'm like, ooh, that's not great. So I set my stop loss at negative $48 and a take profit of actually $300. And then I'm just going to pause for a moment. So as soon as I set that take profit at the actual price point is 157.26, I look at where that is on the chart and think, you know, it might actually not drop all the way down to that. So I'm just going to take profit as high as I can see before it dips down at all. I don't want it to I don't want to lose any potential profits there. And I'll just hit play here. I'll show you what happens. So I see it spike. It goes to $40, which is great. And then it spikes to $72 in just a half second here. Right? I decide to take that, double click out. And now because that trade was done as a market order, I only actually took $51 as profit, as you see here. Which is still great considering that was $50 in like a minute. That's pretty awesome. So at this point, you've seen me use the AI signals a few times now to take advantage of an opportunity. Next, I'm going to show you how they work. So the AI that Pilot uses doesn't just look at historical price information, charts, and use statistics to determine good trading opportunities. It uses mathematical psychology. The market, like any supply and demand-based system, isn't a representation of actual value, but of perceived value. QuantGate hypothesized that psychology and social behavior were the two dominant forces driving the direction of the market, and then created these 4 AI engines that were able to quantify that information. By understanding how market participants think, the AI can approximate what effect it'll have on price direction. Each signal light represents a core AI signal. Here in the watch list, the signal lights are represented underneath the price information. If you click into a specific security, the 4 AI signals are represented here. From right to left, we have perception, commitment, equilibrium, and then sentiment. Perception refers to how traders collectively view and interpret the market at any given moment. This signal helps us understand the overall impression or belief that active traders have about the market's value. It tells us what traders collectively think about where the market is heading. By analyzing market perception in real time, it identifies potential trading opportunities based on the collective view of all of the participants in the market. So the commitment algorithm indicates how dedicated or determined that traders are to buying or selling a particular security by paying close attention to the orders and the cancellation of orders that traders are making. This signal helps us gauge the strength of trader intent in their current buying or selling actions. It tells us if traders are strongly committed or not to a particular direction. Understanding trader commitment assists the AI in spotting potential market shifts. For example, a high commitment in one direction may indicate a strong trend, while cancellations may indicate a reversal to take advantage of. Equilibrium refers to the balance or the stability in the market, considering both emotional reactions and actual value. This signal shows how much of the market's emotions are deviating from its fair or true value compared to if all of the orders on the book were executed. Traders can use this equilibrium signal to assess the emotional state of the market and identify potential opportunities when emotions are significantly divergent from market value. It can help us determine when the market might revert to a more steady state. When both the perception and the commitment algorithms align, and then the equilibrium signal indicates that there is a significant emotional deviation, it may be a sign that a market correction is likely. Sentiment refers to the collective emotional state of the various trader groups within the market. This is really important. This signal represents how the different trader groups feel about the market in real time, offering insights into the overall market sentiment shifts. When combined with the perception, commitment, and equilibrium signals, sentiment helps pinpoint the optimal time to enter or exit the market. It provides a confirmation of the market perception and helps traders make more precise decisions. So the sentiment information is represented by the bar chart that you see displayed underneath the security information once you've selected a security. Each bar represents a different participant group in the market. The more active traders, like the high frequency traders, they're represented in the center here, and on the outside edges you have the less active traders. If the lines are blue, it indicates positive or upwards price momentum, and if they're red, it indicates a negative or downward price momentum. You can kind of think about it like a flame. The hottest parts get brighter and whiter. It's true whether you're talking about it being positive or negative. You'll see it either kind of go a bright blue like this, or like you saw at the beginning of this video where it was kind of going like a bright red for a moment. The brighter the color, the more momentum the price change has. So in summary, these signals provide traders with valuable information about how the market is perceived, how committed traders are to their actions, the emotional state of the market, and the overall sentiment among all the different trader groups. The signal system can provide a summary of these four algorithms in one glance. So if you're viewing the security specifically, like I am here, right above the graph you see the four indicator lights here. Now if you're looking at your watch list, those four indicator lights are to the right of the gauge and underneath the price action here, or the price points. So let us know what else you'd like to see or have explained, or any questions you have.